for those who are interested in real estate related topics. And we encourage you to continue, to join us as we bring topics to the table that you may be interested in. So with that, I am going to turn it over to Dr. Angela Cleo Smith.
Okay.
And then she will in turn introduce our guest speaker this evening.
Okay. I'm wondering if anyone needs to introduce themselves. That you might know everyone, but I don't know if everyone knows. But what do you think? Should we meet everyone?
Yeah. On you. Go ahead.
Okay. Yeah. So I was thinking that's what we usually do. Just briefly, just tell us your name and your occupation, and then we can move on. I'm the co-host here. My name is Angela, and I am a real estate agent. And I'm going to pass the mic to Andrea.
On mute.
Thanks. Hi, I'm Andrea Garcia, and I live in Virginia, and I currently work for the world's largest credit union as an investment advisor.
And pass the mic. Oh.
Let's see. I'll pass the mic to Jason.
Hey everybody, my name is Jason Matthews, President and CEO of Matthews Financial Insurance Solutions, where we specialize in working with people who come across a windfall of money, either through an inheritance, settlement, sale of real estate, or their business has grown substantially. And I'll pass the mic over to Andre Robinson.
Good evening, everybody. Andre Robinson. I'm a neighborhood builder, neighborhood developer, real estate developer, and workforce developer in Baltimore, Maryland. And I'll pass the mic to, where is everybody? Sedelia.
Oh, hi, my name is Sedelia Benton. I'm a real estate broker. I'm the owner of Unlimited Real Estate. Been in business about 47 years full-time. I'm a tax preparer, and I am a traveling notary. I do a lot of notary for a long time.
Sedelia, we can hardly hear you at all, so I don't know if you need to get close to the mic or something, but.
I'll turn it up. My name is Sedelia Benton. I'm the owner of Unlimited Real Estate. I'm a broker. I've been in business 47 years full-time. I'm a notary for loan docs, and I'm an income tax preparer.
Thank you.
I'll pass the mic over to Georgia Richardson.
Georgia, you're on your mic. Okay. We can't hear you, Georgia.
I was saying I thought intros, but everybody wasn't on. I'm Georgia Richardson, one of the hosts of the Real Estate Forum. Welcome to all of you. I'm a real estate broker here in Oakland for over 36 years. And just feel honored to be able to serve in this capacity to provide real estate information to those who are interested. And I am going to pass the mic over to Mr. Ellington. And you need to unmute. Yeah.
I'm good. Good afternoon. My name is Randy Ellington. I was born and raised in the San Francisco Bay Area in Oakland, and I currently live in Berkeley.
What do you do, Randy?
I'm a Lyft driver.
Oh, good.
But I am a licensed real estate broker.
Oh, okay. And pass the mic on to.
He's modest. He does more than that, but that's all right. Pass the mic, Randy.
Okay, so I came in late. I don't know who's left.
I think Divine.
Divine and Miles and.
Okay, Divine, it's on you.
Hi guys, my name is Divine Couture. I am a commercial leasing and sales broker for the Hawthorne Group. I've been doing real estate for about 7 years. For the last year, I've been developing a company called Learn Commercial Real Estate, where I help realtors diversify into commercial leasing. So it provides them an extra stream of income and help them understand how to invest their commissions into purchasing properties so we can create generational wealth. Since being in the commercial real estate industry, there's like a handful of Black representation there. And I'm like, I think the only Black girl in San Francisco, maybe one or two that work in Oakland. So my goal is to see a bunch of us making a lot of money and buying property and creating opportunities for ourselves.
Sounds good. Okay, let's pass the mic to whoever's left. Miles, I guess. I don't know if you can see that.
Hi, everybody.
Okay.
Hi, Miles.
Hi, everybody. I'm Miles Tillman with Infinity. Oh, hello. Yeah, I'm Miles Tillman with Infinity Investments. I'm a real estate agent and investor based out of Oakland. And which was previously just mentioned, I'm looking to expand more and more into the commercial space because there's definitely not enough of our people in the commercial space as of now, for sure.
Okay. And you on the phone, I think your name is Diane, right? Do you hear us? Hi,
Yes.
Diane.
Yes.
Okay.
Hi.
Mm-hmm.
Hi, my name's Diane. And I'm basically interested in investing. I've taken, 3 real estate classes, but I haven't taken the exam yet. But I'm more interested in investing.
Okay. Well, thank you. I think we have everyone. If we missed someone, please let me know. Really excited about this evening's topic. And when I introduce you to Jason is the person who's going to be speaking, but Jason is also someone that I work with who is guiding me and helping me in some of my financial situations, because sometimes we make money, we're not sure what to do with it. And then at the end of the year, we end up paying so much money in taxes. And I want to know, personally, how can I, either invest or put my money in the right area so that the IRS doesn't get all of it. So I think one other person came on. Is that you, Frederick? You want to introduce yourself real quick, who you are and what you do? And unmute.
Hi, my name is Frederick Tate. I'm not sure who all I'm on with, but I know a couple people on there.
Lynette Warfield.
Join the meeting. Huh?
Go ahead.
I've been in the real estate business close to 25 years, mainly as an investor, sometimes as an agent, and now as a developer. So that's what I'm doing this business. And it's actually nice to be, even though it's Sunday, to be on a forum with some people, because I'm tired of working with myself. So thank you for inviting me, Georgia.
Okay, welcome, Frederick. And was that Lynette? You want to introduce yourself and what you do? Lynette? If not, we're just, if people come in, we're just going to move on. Anyway, I want to introduce you to Jason Matthews. He has, a whole presentation for us today, and I'm just going to turn it over to you, Jason. Go ahead.
All right.
Welcome.
Definitely. Thanks, everybody. Thank you for definitely, Angela and Georgia, for allowing me to be on the call. About to do a share my screen. I'm really excited about this. Right now during this recession, I actually like recessions because it allows people who are educating themselves and who stay educated to take advantage of these times while other people run to the hills scared and shocked and panicked. So while people are educating yourself like yourselves who get on these calls tonight instead of watching Sunday Night Football, I think this is a great time for you to definitely educate yourselves about this. I'm about to share my screen. So what I'm talking about tonight is the 5 biggest mistakes real estate agents make. And before I get started, I really want to just talk about a little bit about myself so you guys can have a better understanding. I do get a little bit excited when it comes to talking money. So if I do, raise your hand on the screen, let me know, or just say a comment, or if you do have a question within this period of time as well. So I am the president and CEO of Matthews Financial Insurance Solutions. We started in the last financial crisis in 2009. Remember when Washington Mutual and Wachovia was closing and Bear Stearns was shut down, forced by the government, and we've had all this crisis, and I decided to open up my firm, Matthews Financial Insurance Solutions. And then in 2008, we've been having a lot of success, but in 2008, I published a book called The Age of Self-Reliance. And the reason I wrote that book is I want to give people a warning about the next financial storm that I thought was coming. And I truly believe at that point when I wrote this book that the next financial crisis was going to be worse than we saw in 2008 in the last Great Recession. And I think right now the book is coming to fruition. It's funny having people write my book and put comments on Facebook or on Amazon and just say, man, that your book was right on point about what is coming or what's happening now. And I truly believe that my book is on point. And I think right now we're just in the beginning of the stages to really see things. I remember 2008 in the last election, during this period of time in the 2008 election, where you had Barack Obama and George Bush thinking about how they was going to bail out Citigroup and AIG right before the election. And we saw people having financial issues and businesses, but we didn't see the brunt of it until afterwards. And I think right now, I was reflecting on that earlier today, driving back from San Jose, that's how I feel like we haven't seen the brunt of it. We remember seeing things empty or people moving, but now we see houses moving. And so it's just a very interesting times right now. I'm also part of the $1 Million Roundtable. And if you don't know what that is, that puts me in the top 1% of financial advisors, not just in the United States and in the world, which is a huge, huge accomplishment, as there's a very small amount of these people are actually African-American, part of this group. And I'm part of being that group. As far as financial advice, I probably do way more business than any Black person underneath the age of 40 here in Northern California, bar none, right? And me and my firm, we have a staff and we do some really good work working for folks. So let's get into tonight with the 5 biggest mistakes I see real estate agents make. And the first mistake I see with a lot of real estate agents is they're not being organized. They're simply not organized. And what I mean by organized is a couple of things that you as a real estate agent, you as a broker, residential, commercial, doesn't matter, what you should do. One thing is you should track your receipts or expenses, which means this. You should be you can do old school and just track everything down in your expense book. If you have an old fold-up expense book where you track everything down, you should keep your receipts in the QuickBooks, or it should be some type of way where you track all your expenses, right? The second thing I think you need to do is figure out what's your profits and loss statement. How much money am I actually making every year, or how much money I'm actually losing in this business? And then the third thing is really, what's your cash flow, right? How much money do you need to make every single month once we really look at our expenses? So me as an individual, I have to look at how much cash do I need every month? How much I need to pay for my automobile? How much I need to pay for my office? How much do I need to pay for my staff? How much cash flow do I need to make over a continuous basis, month in, month out? And I feel like a lot of times when I see real estate agents, I work with tons and tons of real estate agents over the last 16 years. I was with New York Life from 2004 to 2009, then I opened up my firm in 2009. And I work tons of real estate agents, and the basic thing I see is they simply not organized, and they don't know their numbers. And I always say is we have to reverse engineer what we really want. How does it look like? How much cash do I need every month? Because if not, we're just lost. And so that's the first thing I'll recommend. The second mistake I see is not planning for cycles, right? So when I talk about planning for cycles, there's a couple things. We all have our own cycle of where we have booms, slumps, and booms and recessions. And every business might not have a cycle where you might have a downturn. So I know oftentimes when I talk to real estate agents, I know November, December, and January is a slow time. But then we know that your business is going to pick up from April to October. So you have to get every single dollar you can during that period of time. So you have to know your own business cycle for that. So you could do this. And why I say it's a big mistake is this. Hey, if I don't know, I don't get paid usually in December and January, because that's when people are not thinking about buying homes, where they're not visiting homes because of the rain or the snow or where you're at on this call. I should prepare for that time by figuring out how can I make some that money I make from March, April, when real estate business is hot, from April down to October, and stack some of that money away. So when the slow period comes in December, January, wherever your personal cycle is, that, you know what, I have money reserves where I'm not stressing, I'm not worried, I'm not getting behind on my bills at that period of time. But at the same time, I show you guys the sales cycle because I know when I first got in business when I was 20 years old, right, selling insurance and investments, that oftentimes it was very challenging. It was very challenging at times going through the sales cycle because I didn't get paid till something closed. So with that being said, is we have to properly plan and say, hey, I know the average sale is going to take 4 to 6 weeks for some people. Maybe yours is 6 to 8, whatever it is. But I should probably prepare myself to make sure that I have the proper amount of money to make sure I carry me out for that period before I actually close this from a client coming from a prospect down to actually closing them. Let's see. Whoops, sorry about that. Now, here's my third mistake I see a lot of real estate agents make. Whoops, let me put this down. A little mistake. Is the third mistake I say is not becoming an S corporation. Here's the reason why. Most self-employed people, this is real estate agents, this is the sole proprietor, this is for somebody who have their own business and who are self-employed and they have this huge thing. They become sole proprietorships and they stay that way. Now, when you first start off in business, it's cool. I just want to open up a business. I'm super excited about it. I just want to put a sign up to my door, which is fine. But after we make a certain amount of money, which I would say is $30,000 net when I recommend that, we should switch over from being, and I'm looking for my, we should switch over from being an S-corp. Whoops, let me go back. We should go from being an S-corp, a sole prop to an S-corp. And here's the reason why. Oftentimes when we're sole proprietorship, the biggest thing that we get killed on is self-employment taxes. We can, as being a sole prop, you cannot avoid self-employment tax. And self-employment tax is 15.3 off top. So right here on this graph, it might be a little bit confusing. If you guys want to make it a little bit bigger, I can make it bigger for you. But what it says is that, let's say, hey, I made a good year. I net, not gross, but I net $100,000. Next thing you know, Uncle Sam said, hey, you need to pay Social Security, FICA, Medicare. You owe us 15.3% in self-employment tax. So if you net $100,000 off top, you're paying $15,300 of your tax bill to the IRS for Social Security. That does not include your regular federal taxes. That doesn't include your state taxes as well. Now, what I recommend is set up an S-corp, and I don't do taxes. Talk to your tax advisor. I can talk to you as well as we consult, but we actually don't know your taxes or your personal situation. And if you want to, we can set up an appointment or a meeting with that. Just reach out to me if you like. Now, the reason why I say you should become an S-corp, because what the S-corp does, it gives you additional tax deduction, but the biggest one and the simplest one is it allows you to give yourself a salary and not all your money get passed through and pay so much in self-employment. So what I show right here is somebody who said, hey, I net $100,000. I pay myself a salary, $50,000, and I pay myself what they call a K1. And if you don't know what it is, a K1 is almost like a dividend out of your business to yourself. But the good thing about a K1 is you don't have to pay self-employment tax. You only have to pay your federal and your state. So let's say if I did a 50-50 split between $50,000 salary and $50,000 as my K1. I now only going to pay 15.3 in self-employment tax. So I just cut my tax bill in half just by doing that. So now my tax bill is only $7,650 compared to $15,300. A 50% savings off of making the same amount of profit, but my structure of my business is totally different. Now, yes, this might cost you a couple of dollars, about $800, $400, $800, depends where you go. And you might have to be organized, which is rule number one. But the tax benefits of $7,000, over $7,000 is a huge savings. And we can do a lot of different things with $7,000 for it. The next thing, the fourth mistake is, would you rather protect the geese or the goose or the golden egg. Oftentimes, we protect the golden eggs, but not the goose who makes it. So let me grab some water. So what do I mean by that? Oftentimes, we make sure that we protect the golden eggs, which means we get homeowners insurance, we get auto insurance, and we do all the things that protect everything we own, but we don't take care of our own selves, which is this. We don't make sure that we have disability insurance. If you're in real estate, all you do is constantly hustling. You're looking for deals. Hustle, hustle, hustle. If you're unable to find deals, you have no cash flow coming. And rule number one, again, wealthy, is you have to build some type of cash flow. So with that says, if you get sick, I should make sure I have some disability insurance. If I get sick, I cannot no longer make golden eggs. If I pass away, I never have no more golden eggs for my family. So the rule of the thumb is I should protect myself by making sure I have proper health insurance, make sure I have proper disability insurance. If I'm over the age of 50, I should be looking at 50 or above, I should say, I should look at some type of long-term care plan. If I get sick, who's going to take care of me? Because if we don't do that, we can no longer produce golden eggs. And we have to continue to produce golden eggs because we are the golden goose in our lives, our family, and our businesses. And if you're like me who have payroll, you're the golden goose for those people, families as well, where the cash has to continue to go and keep flowing for them. The fifth thing I want to say is not diversifying. Oftentimes, I hear tons of real estate agents, and if you're not familiar with these 4 buckets are the buckets that are in my book, The Age of Self-Reliance. And I talk about we all have 4 buckets. We have our guaranteed bucket, which is our Social Security pension, our tax-deferred bucket, which is our 401k IRA, our taxable bucket, which is our Roth and cash value life insurance or 529 plan. And the last is the investment bucket, which can be real estate or stocks or mutual funds or anything that consider investments. But what I see, the big mistake what I see with a lot of real estate agents is that they only focus on this investment bucket. And the one thing they invest in is real estate, which is fine, which is dandy, and I love real estate. But if we really want to lower or minimize our taxes, we should be looking at our tax deferred bucket. If we're looking for a place to hold our money that we might go back and invest, we might want to look at our taxable bucket and use our Roth IRA cash value life insurance. The problem is if we're only looking at real estate, we don't always get all the tax benefits we need to lower our taxable income. At the same time, our money is not always liquid because real estate is not always liquid. It's a great asset to have. It can generate great cash flow, but it's not always liquid. If we want to sell today, we cannot sell today. Unlike the stock market, if we have a stock, we can sell it in 5 minutes, a Tesla stock or Apple stock. But real estate is a process to sell it, so it's not actually a liquid asset. So what I always recommend is we should diversify just a little bit by making sure we have some money in our taxable bucket, and we pull out the money tax-free, our tax-deferred bucket, and investing. Now, I'm not saying that you shouldn't get away from real estate, but you should look at diversifying. And that's one thing I would say is one of the big mistakes that I see a lot of real estate agents are doing as far as one of their 5 biggest mistakes that I really do see within their plans.
Hey, Jason, we're still on your 3rd mistake slide. I'm not sure if you were turning your slides.
I was. Let me go back and see what happened. Thank you.
You're welcome.
Do you guys see the 4th one?
We see it now, yes.
All right, perfect. And I
missed the cycle one too. I saw it on the side, but not on the big screen. But you can come back to that.
Okay, and let's see what happened. And so do you guys see the buckets on the 5th one?
Yes.
And so right here is the 4 buckets you guys should be looking for as diversification. Now you guys automatically put money in your guaranteed bucket, but what we should be looking at, like I said, is putting money in your tax deferred bucket to lower your taxable income, and put money in your taxable bucket, and then also in your investment bucket. Now here's a bonus one I don't have on here, and that is knowing your dates, which means this. Oftentimes, as far as planning, we forget certain dates are highly important and planning for them. For instance, tax day for a lot of us might be April 15th if we're a sole proprietor, or an individual. But if you're a business or an S-corp, your actual date is March 15th. And if we don't file our taxes that day, yes, we can file an extension, but the IRS doesn't say, oh, you don't have to owe us any taxes. What they tell you is, oh, we're going to charge you interest until you pay. So a bonus that's not on here would be telling you this. One thing, know your dates, know when your taxes are due. Know that, hey, I should not wait until April 15th or March 15th. I should actually have my taxes organized in November, and then meet with my financial advisor or my tax preparer, whoever my tax advisor is, in November, December. The reason being is that we can still maximize your tax deductions at that time. But if all we're doing is giving our receipts in March and organizing at that point, a lot of the deductions that we want to do are gone away because now it's too late in the year. There still might be a couple, but we're not maximizing all the deductions that we could have. And the key to having money is not to pay Uncle Sam as minimal as possible. So that's one thing. Another thing I would tell, the second bonus that I want to give to this as well, that I don't have on here as a screen, is that we should also set up a third account just for our taxes. Is a huge mistake that I see real estate agents make. So they have their checking, they have their savings. But if we're being financially responsible, we should have a checking account where a portion of our funds goes towards just for taxes. So that means this: if I know that I pay 20% of my income go towards taxes, I should put that 20% into my tax account. So when my tax bill is due, I can write them a check instead of putting the IRS on a payment plan. And if we do that, it makes the world a lot smoother than if we say, hey, I spent all my money. 2019 was a great year. I'm doing my taxes now. October 15th, filed extension. And now my tax advisor tell me, oh, you owe 50 grand. I'm like, oh, shoot. I'm stressing out. Don't know what to do. But if we put that 20% or 30%, and the way you can really look at that is going back and seeing our tax advisor in November and say, based off my income and expenses, what can I do? And they might say, hey, you need to buy a car for fun. Or they might say, hey, you need to put money into your 401k plan. But now you have a plan going into it instead of waiting to the last minute, and we don't know those deductions that we could possibly have that we could be maximizing for ourselves. And in inclusion of that, that's the 5 biggest mistakes, plus a couple bonuses of what I often see that real estate agents often make with their finances. Do anybody have any questions?
You check the chat and see if anybody put anything in there.
Okay, if we can clear the screen and we have Jason's information. Thank you so much. I mean, I took notes. I don't know about anyone else, but this was very, very helpful. And I'm sure Sedalia I think you're a CPA, right?
No, just tax preparer.
Tax preparer. Okay.
But I would like to know if Jason can refer someone to do an S corporation for you. I don't know if it's a paralegal or someone that can do it for me. I'd like to do an S corp. I've been thinking about it because Trump reduced the taxes for corporations. So
yeah, definitely. I could. I can refer you to somebody for that. Definitely. If you look at Mark Kohler, MARK space KOHLER, he could help. His company can help you set up an S corp.
Okay, thank you.
Definitely. Now, I'll tell you this. If your business is not netting 30, if you don't think you're going to not net 30,000 by the end of the year, from by the time it comes in force, which it takes about a couple of weeks. So let's say from October 1st to December, it's not worth it. But if you feel like you're going to net 30,000 at the end of it, like I got some deals going to close, then I would tell you, you might want to push it back to January 1st because it's not worthwhile for the expenses that go along with it. Plus, when you have an S corp, you do have to pay $800 in taxes every year for that, for your filing fee.
Okay.
But it's so worth it. So worth it.
Thank you. Anyone else have any comments, questions, anything that you want to refute Jason on and say, oh, no, that's not right?
I would like to just commend Jason for giving you guys those tidbits because those are really essential if you're going to build your wealth. One of the primary things I think that that people with a high cash flow forget to do is to put away that money for taxes. And that little note that he gave you of opening an account just for your taxes, I think that that is like a really great nugget of information, because the tax man comes without fail. And putting away money for into an IRA so that you're taking care of your retirement when it's done, and also investing, diversifying, and not just investing just in real estate. Like you said, sometimes you need to get liquid. Health insurance, supremely important for people that are independent, because you have no one to depend on but yourself for that health insurance. So that's also very important. Thanks for that, Jason. You're awesome.
Definitely. You know, when you talk about health insurance, and I know next month is Breast Cancer Awareness Month, but if you look at, when we talk about healthcare, it's crazy when you think about 70% of women who are survivors of breast cancer file for bankruptcy in America. We don't talk about that enough, but the expenses of you going through chemo, unable to work, and yet you still have to put a roof over your head. You might have kids might have kids and still have to put food on the table, and the financial strain and the cost that goes with it is enormous. And without the proper health insurance or disability insurance, it puts so many women into bankruptcy and losing so many assets they worked so hard for, just because it's unfortunate in this country, but just because they got breast cancer. It's crazy when we think about Breast Cancer Awareness Month and the cost of it that a lot of women go through because of it, especially next month as we talk about Breast Cancer Awareness Month.
Oh, I'd like to say something, Jason. If some of you guys get Social Security, you can have the federal income tax withheld out of your Social Security. And that's kind of good too, because you can have like money sitting there in the bank waiting on you as a credit to offset some of your income taxes. I know I do that, and sometimes I get a refund, you know, so that's pretty good.
What is the age on that, Sedalia?
Whenever you start getting Social Security, you just fill the form out and sit it in, say take out whatever so much for federal income tax, and they'll take it out. So when you file your taxes, it's like if you had a job, you got that federal income tax sitting there, giving you a credit towards your taxes that you owe. So
Sedalia, what percentage do you have taken out? What makes sense? I mean, everybody's amount is different, but
look and see how much look and see how much you're paying in taxes.
Whatever your tax stats.
Yeah, try to get, at least you won't have to pay at the end of the year, rather than, even if you break even, it's okay. It beats paying every year. Just an idea, so people know you can do that.
Now go ahead.
There's a form you can fill out and send in to them, and they'll deduct federal income taxes out of your Social Security check. So it's like money in the bank.
Now, speaking of healthcare, there's one other thing you guys want to look at. I use this benefit myself personally. If you do have a lot of healthcare costs, I have a 3-year-old who's autistic. Every day I have somebody come to my house Monday through Friday. So I have to pay co-pays every day for him. One thing I'll tell people is if you're self-employed, I know we hear a lot about health savings account, but if you have more than $3,750 every year healthcare costs, look at a health HRA account, which is a health reimbursement account. It's a little bit of a process to do, but you now can deduct dollar for dollar all healthcare expenses that you might have as a self-employed person. So if you make over that $3,750, look at a HRA. If you make less than that, look at a health savings account. But if you have dental expenses, you have tons of co-pays, you have any of that, look at an HRA account. Second thing we're not here, but I'll talk about as well, is putting your kids on payroll. Here as it is. My son plays tons of baseball, travel ball, expensive. We're buying bats, we're traveling, all that. I have my son on payroll. I write a job description. I have a job description. I talk about what he does, and he's 11 years old. But guess what I do now? Every time he does a task, I put it on payroll. So what does that mean? I can give him up to $12,000 every single year. That money I give to him is going to be tax-free because he's under the standard threshold for taxes. So let's say I gave him $10,000. Boom. underneath that 10,000, all that money gonna be tax free. I have on payroll. I put a job description. I actually give him payroll a payroll check. And the good thing is I don't have to pay FICA for him, right? Because I can 1099 him because I have I have an s-corp and along with a sole prop, and I pay him out through my sole proprietor as doing janitorial for me. He does my birthday cards. So if you don't like the handwriting or you think it's a kiddie handwriting, great. It's my son who does it. He does our birthday cards. But it's another great benefit you could do if you're a small business owner as well, by putting each one of your kids on payroll for $12,000 or less every single year as well.
I don't know anybody in here has kids under 20.
Mine are wrong.
What about
Put your grandkids on there.
Okay.
No, here's what if you have grandkids, put your grandkids on payroll, right? Write your grandkids a check. You can write that check for them, and it pays for all the expenses you might normally have for them. So that payroll check is not going just to him for a paycheck. It's paying for my son's school. Every time he needs to go to school and he needs some extra school supplies, that payroll check pays for the school supplies. Every time he wants a new baseball bat, coming through payroll. Every time he pays for his dues for baseball, it's coming from his payroll check. So now, instead of me just paying out that money off top and it's not deductible, now I made that as a deduction for myself.
Is that only through an s-corp, or can you do that as sole proprietor too?
So my ideal, let me grab my pen. I'm about to show you guys a whiteboard on how I would structure myself ideally to do it. I'm going to share my screen with you guys and do a whiteboard for it. I pull up my, can you guys see my whiteboard?
Yes.
Yes.
So the ideal situation is for you to set up an s-corp. And then after that, is you can set up your family management company, sole prop, which I tell you, go to the county office, set up your sole prop. That sole prop now should pay for two things. One, your HRA account, and then your kids' payroll. That should be the ideal situation for you. And then your s-corp should give you your salary and then your K1. This, for me, is for most business owners, this should be your ideal situation. And then when tax comes, and then when you're ready, if you need a retirement plan as an s-corp, what I'll tell you to do is set up a 401k plan. If you still have to file your taxes now to October 15th, go ahead, and you don't have a 401k plan, do a SEP account. But after that, what you should do by the end of the year is set up a 401k plan, because now you can even get better deductions with your 401k plan, and then your 401k plan can be funded by your K1 and then also through your salary.
And your 401k plan will reduce your taxable income.
Correct. And you can borrow from it. So you can borrow up to 50 grand, half of it up to 50 grand out of it. You can borrow from it to buy real estate if you ever see an opportunity down the road that you will like, or anything else with it.
Explain the K1 again for me.
A K1, I would say, is like your dividends out of your business. That's the easiest way to explain it. So we have our salary that we have ourselves, but we have a dividend that we come out of our business. And that thing is probably the easiest way to say that is our dividend out of our business. Now, when do we issue dividends for ourselves? Whenever you like. But that's how I consider a K1 is like your dividend for your business, the simplest way to say it.
Okay. Any more questions or comments?
I would suggest that if you don't have a good accounting system, that is your number one priority, is to have a good accounting system. Set up a good system for yourself. If it's just a file folder that you have your receipts and what you spend out when you go for business lunches, when you take a client out, how much you drink for your gas and so forth, like he mentioned in the first mistakes, I would suggest that strongly to do that, because you are going to need to do that, have all those things for your taxes.
Okay.
So right about that. Go ahead, Lynette.
Can you hear me
Go ahead,
now?
Lynette.
Okay, my question was regarding the grandkids. If you put them on payroll, is that monthly, every 2 weeks? How do you set it up?
Whenever you choose to.
Okay, okay. And so once you get towards end of the year, how do you follow up? Like gather the information, or is it an account, or
I will have my records of when they, so that when, if you ever get audited, what they want to do is they want to see all your records of when they did work. So I just have them say, hey, they worked these certain hours for me. And then I can write that check whenever I want to for them. It could be end of the year where you write that check and then you put it in their 529 plan if you like, which is a cost savings account for them. It's up to you. But you have, I'll keep a file, have their name with it, with a job description and the hours that they did work, and give them a reasonable salary. Keyword is a reasonable salary for everything.
okay.
So
Okay,
don't give them, don't say they just take out the trash too. When I was a kid, my dad had a janitorial business, and I used to take out the trash whenever we worked at different places. Don't make that job a $500 an hour job. The IRS going to look at you and say, you're playing. Quit playing with us, right? And you don't ever want, I see the IRS is like an ugly girl during prom night. You don't want to get her mad. Just show her a little bit of love. You'll be okay. So don't treat her with the, so just give her some little bit of love. Give her a reasonable salary, and you'll be okay. But if you're giving them that $200 thing, it doesn't. But let's say reasonable salary in Oakland right now for minimum wage is what, $15 an hour? So you can do that. So just show $15 an hour. They did all my birthday cards for the year. Here's the days that they work. Boom, you're good to go.
And not to go over 12,000 though, right? Is that correct?
You don't want to go over 12,000.
That's great information. Thank you very much. Thank you.
You're welcome. Now, like I said, you do want to go to your county and set up your sole proprietor for your family management company. So don't say, hey, I'm going to just write that check today. Go ahead, set up the family management company for it.
I remember going to a Stan Mural presentation, and he was, you know, I wondered at the beginning, he has his family, the pictures, and incorporates his wife, his family into his presentation. And later in the process, he was saying that basically he paid them a salary. They were a part of his business in that from the advertising standpoint, and he was throwing in some of those ideas too about what you can write, you know, include in your write-offs. And he used his family as a part of that, as a part of his presentation.
Yeah, which is a great idea. Another thing is if your family's on your board. Now, when you take vacations, usually for business, right, I'm having my board meetings wherever I like. So if we're having a board meeting in Florida, let's say I decide to go to Florida for baseball in December, I can say we're having a board meeting. And if I can prove and show that we had our board meetings, took up a good portion of that baseball trip, and we actually had our board minutes, then that can be another thing as well for our travel expenses for the whole family. But the key is stay organized, and talk about and have your minutes notes jotted down as a corporation. If you're doing a corporation and you're not keeping down your minutes, you're missing the boat on a lot of these things, and you're leaving a gap to be audited and not having the records approved.
Mm-hmm. So the s-corp is a corporation where you have to have a board. Is that correct?
Right.
Mm-hmm. Yeah.
But it doesn't have, it could be a board of one, or some people have their whole family as on their board, or their friends. And I'll tell all of us, we should have some people on our board, on our business board, because it's going to help us grow our business and get good advice and good tips. We could all be on each other's board if we wanted to. And we can say, hey, here's the troubles I have with my business. This person is great for having relationships. This person helped me raise money for my business. This person gave me a different perspective. But we can have whoever we like on our board. It doesn't mean that they have ownership. They're just on my board, which are two different things.
I'd like to say one thing too. IRS does not say that you have to pay taxes. They say you have to file taxes to show that you don't owe nothing. You know what I mean? You don't have to pay. You need to file to show that you don't owe anything. Mm-hmm. We're supposed to.
That's a good point.
Mm-hmm.
Okay. So I guess we're gonna end on this note. Jason, very, very, very good. And if you need Jason's information, I know you had it on your the last page of your PowerPoint presentation. But if you need Jason's information, just let us know. Or Jason, you could put it in the chat box. There it is.
Perfect. There's my information on the chat book. If you want my book, you could go to Amazon, and I'm willing to actually raffle one of my books tonight. If you, Angela, Georgia, if you guys can figure out who was the lucky winner as well, I will raffle off one of my books, sign autograph to you guys as well.
Oh, that's nice. And how will we do that?
I don't know. You guys can figure it out. Everybody write my name down.
Okay. Georgia, unmute yourself. Let's do a quick raffle.
By the way, as well for you guys. The Age of Self-Reliance, fantastic book. Like I said, I predicted that this year was going to be way worse than it was in 08, and I think we're just in the first beginning of this whole thing. I mean, it's going to be very interesting to see what happens in January on.
I have an idea. Does anybody have a September birthday?
Andrea.
Andrea has a September birthday.
Yes,
Anybody else?
Yeah, I do.
Uh-oh. All right. So I'm gonna pick a number, not knowing which of you. I don't know your dates. So whoever is closer to 10.
I'm the 7th.
Oh yeah, she wins. I'm 30. September 30th.
Okay, so Andrea.
Well, thank you. This is awesome.
Congrats.
Happy birthday, anyway.
Yeah.
Thank you. Happy birthday to you too.
Thanks.
Thank you, everyone. So what I'd like to do now is just get a pulse on. I take it everybody got a takeaway from this. Lynette, you have your hand up. Did you have another question or comment? You're on mute. Lynette?
Was that before or?
No, that was before. That was
okay.
before.
Okay. So I'm going to assume that everybody, or maybe I shouldn't assume, did everybody, and just wave your hand. Yeah, you did. You got some kind of nugget out of this whole process. Some kind of nugget.
I did.
Yeah.
Okay. All right.
Yes,
good.
definitely.
Good. So the next thing is, Angela and I really want to make this forum of value, and not just to come, listen to us talk about what we might know about real estate, but we want to bring in information that is valuable to you that otherwise you may have to go out and seek, possibly pay for. Some of the information that Jason just gave you, obviously, it's an opportunity for him to serve you in a business capacity if you so choose, and call him. That's part of the incentive. We all want to get something out of it. Fair exchange is no robbery. So my question is, you all got something out of this. Are there any other, there goes my face freezing on there. But you can still hear me, right?
Yeah.
Yes.
So if there are any other topics that you would like to have us bring to the forum, could you jot it in the chat box for us so we can look at it for later, and as we plan out, because right now we're kind of going week for week. This is all fairly new, but each week it's building upon itself, and we want to continue to bring valuable information to you. So if you can think of anything, and if you can't think of anything right now, you know how to reach me, or you know how to reach Angela, and let us know, and we'll consider that. It's not just us choosing what we want to present to you, but we want to also know, what you need from the forum. Like I said, it's fair exchange. There's no robbery here.
I was also going to piggyback off that real quick, Georgia, before you move forward. Also, if you want to host, well, I guess present your expertise on a topic, please let us know that as well, because you might want to learn something, but you also have valuable information and experience that you might want to share. So let us know that, and you will be the one. You don't necessarily have to have a PowerPoint presentation, but if you do, that's wonderful. Visuals are always great. So yeah, if you want to host or do a presentation, please let us know.
Okay, so I'm assuming everybody can see the chat. Andrea says, let's have a discussion about commercial side. And that was, oh my gosh, that was what I was thinking. I would love to get some pointers. I've in a situation now where I have a client who wants to look at 5 units and up. I've done up to 4 units, and I've done a couple of listings or co-buyer relationships with commercial agents, but I wouldn't mind hearing more about how to do, how to actually calculate your return and all of that kind of stuff on evaluating commercial property. Sedelia says financing and ADUs, auxiliary dwelling units. Does everybody know what those are? Okay, that's the hottest thing right now. You can get some breaks from the city and the state for building ADUs as an additional because of the shortage in housing. So that's a good topic. And REITs, real estate investment trust. So that's good. That's good. So Angela and I we'll try to schedule out going forward, getting some topics, and then we can plan it out so you have a calendar and know what's going to be covered from week to week. We've just been kind of throwing things against the wall here to see what people are interested in, had an idea and wanted to act on it. And we really appreciate all of you who've been consistent about coming, and all of you who this is your first time. We welcome you to come back every Sunday from 6 to 7. It's the Real Estate Forum question and answer, period, with Dr. Angela Smith and Ms. Georgia Richardson.
That's right. And Frederick, I did see that you said financial planning. Is that what you said? Financial? Yes.
Yeah, sorry about that.
No, that's no problem. Could you say a little bit more? Because I know Jason is a financial planner. Is that something in particular you're looking at, or just in general as a real estate agent, or what? Tell me more.
Well, just a full estate planning. I'm not sure. I know Jason pretty well. I just haven't talked. We haven't done any business in the last year and a half or so. So it may be things that he can cover, but I'll reach out to him first and talk to him about it. And if it's what I have in mind, if it's something he can cover, then he can just do it. And if it's something that he doesn't cover, I have somebody that I could recommend.
Oh, okay.
So I'll talk to Jason first.
Okay.
And then then since I know Georgia, I'll reach out to her after me and Jason talk.
Okay. And if you do know of an expert and that can help and share information on financial planning, share that with Georgia as well.
Okay, I will.
Yeah,
also, thank you.
And Andre, you are doing something very, I think it's very exciting coming from another city. And in Baltimore and what's happening there with housing, and we talked about gentrification last week. So you may want to do a presentation on just some ideas. And I know that Fred does a lot of investing, works with investors and property and wholesaling and wholesale market with real estate. Frederick, I think you might be interested in some things that Andre is talking about in investment in Baltimore.
Yes, Andre, if I could get your contact information, because I actually know of a development that is for sale there, and you may know some people interested. I'm not trying to do anything on the East Coast right now, just in the area. But anyway, if it's okay, I'll get your contact information.
You're on mute,
I'll put
Andre.
my number in the chat, Fred.
Okay, thanks.
And that's part of what all this is about too, is networking. You know, being able to connect with folks that can help each of us, each of us make money and develop, and getting information that we ordinarily would have to seek out or would necessarily know where to go to get. So it is 6:58, 2 minutes. Countdown. Anybody else have any comments? Sedalia, you wanted to say something, and then Angela, if you want to close us out, that's be good.
Okay.
Let people know there's a program called the PACE program. So if you need a roof or solar.
Come a little closer, so you're muffled.
There is a program called the PACE program. PACE, P-A-C-E, in case you need a roof or solar, your house painted, or things done, they could come out and do the work. And with the solar, they could finance that over a 40-year period. So that way you can have some work done on your property that maybe you need to have done and you really can't afford to have it done now. I know I had a solar roof, I had a tankless hot water heater. That was like $35,000. So it brought my payments up, $300 or so a month. But then my bank automatically took that money and put it into my mortgage and just raised my payments up. So I just have one payment. So, something to know that's out there and, that you can go through.
I'll talk to you about that myself, Sedalia.
Yeah.
Thank you.
Okay, well, thank you so much. Again, thank our guest, Jason Matthews, for all that wonderful information. I took notes. Again, look forward to seeing you every Sunday. You be surprised how much you think you know and how much you might not know. Because, I carry a PhD and I learn something every day. So with that said, I just want to say have a good evening. Enjoy your upcoming week. And look forward to seeing you next week.
Thank you, guys.
All right.
Thank you.
All right.
Thanks.
Bye for now.
Good night, everybody.
Bye. Thank you.
Bye, everybody.
Bye-bye.
Bye.